Hi everyone, welcome back to Be Rich. It's me, Vinod. Happy Sunday. I hope you enjoyed the video yesterday where I spoke about personal finance and what we should look at when we're trying to create wealth. The reason why I'm doing this whole series is to kind of like give you motivation to see how long the road is and how far we all have to go before we reach where we want to go. And we all get distracted by news in the markets and news in the media and stock news in particular, and we get swayed by all this, all the while forgetting that there's a bigger picture and what we're trying to work towards, which is to create the wealth and that foundation which will give us the freedom which we so desire, or whatever goal that you have set, be it retirement or to buy a house or to do whatever you wish. So keep that in mind, that there is a bigger picture we are working towards, and not get swayed by these news cycles that run. Talking about news cycles, on Friday, IndusInd Bank shares were going down, and suddenly towards the end of the trading day, it shot up and went up almost by 3% from the lows. And all that seems to be regarding RBI requesting the bank to the CEO to step down and the deputy to step down and to find someone to replace them as soon as possible. Then later on in the evening, IndusInd came out refuting it, saying, no, that's not true, there's nothing like that. And even as I'm recording this video, Reuters is reporting RBI has asked for that. So we'll have to wait and watch. So again, if you're asking me, is there any problem in IndusInd? I fundamentally don't think there's any problem in IndusInd. These kinds of leadership tussles IndusInd famously had with the RBI in the past, so it continues having. We'll have to see where this goes. Keep an eye on it. I'm not saying take your eye off the ball. Do keep an eye on it, keep tracking it. As long as the promoters are sound and they seem to be supporting the bank and they seem to be raising funds, and even the last round which they raised, I think 11,000 crores or odd, shows there's confidence in the market with the bank. And RBI has also stepped out and said they think the bank is absolutely fine. It's just some issues they've had with the leadership, the people running the bank, that is the CEO and the deputy, and some accounting lapses that have happened. So keep an eye on that news is what I would say. Getting back to the video and to the point, today I want to talk about further a little bit about asset allocation and how asset allocation is important in creating wealth. And Anand has spoken about asset allocation in the past, but he may not have said it as asset allocation because the problem is Anand is very advanced in his understanding of market and nuances. So he assumes most of us are the same or close to where he is when he's talking about things. Sometimes we're not. So we kind of like miss the nitty-gritties of what he's saying. That's why I try to do these explainer videos, trying to explain a little more detail in what he's trying to say. He has said, in the past, if you have a lump sum, invest it in bonds and take the bonds and invest the interest into stocks. And that is asset allocation in assets. So if you're wondering why Anand hasn't said about anything about asset allocation, he does. He just doesn't spell it out because he assumes you know what he's talking about. And asset allocation is far more important than stock picking. All of you focus on patas list, and you're thinking about one or two stocks which we should buy. That is true, but that only comes to light if you've done the rest of it. And the rest of it, you guys tend to forget all the time. We have done many videos about it where Anand says, what you should first do before you get into buying stocks. And all of you who join the party in between keep forgetting there is a set of things that you need to do before you get into stocks and investing especially. One thing he does say is you should definitely close all the loans, whichever loans you do have, try and close loans, do not keep any debt. Then he says make sure you have term insurance, simple term insurance, nothing complicated, no product term insurance, just a simple term insurance. If there is no safety net for you and your family, then he talks about medical insurance to make sure you have medical coverage, because medical costs in India is rising at an alarming rate, and you may be suddenly, you never know when an emergency happens. So make sure you get medical insurance as soon as possible. He says to keep some gold, as always as an emergency. He prefers it being physical because he says in case of any situation, you can always take the physical gold with you and run. And he also emphasizes on keeping some emergency money. Emergency money can be 6 months to a year of your salary, keeping it in a liquid form. And a liquid form could be like a gold ETF, could be in some way where you can liquidate it easily, even an FD, or even keep it as cash, though cash really doesn't do anything. He says once you do all that, then you're pretty much ready to start investing. So before you get into the patas list, there's a whole bunch of things to do. Right? Now, even after you finish that, we get into this thing called asset allocation. Asset allocation, like I said in the previous video, is how you think to put your funds together and how you build your portfolio of assets or investments to take you to where you want to go. And the main things you should keep in mind when you talk about asset allocation is, what are the key things you should think of before getting an asset? One is your age. Age plays an important role when it comes to asset allocation. The next I would say is goal. And third would be the source of your income. Because some people have a steady job, you have a steady salary, so you get monthly income. Some people are doing businesses, so income fluctuates, maybe end of the year you get a lump sum. For some people, it's seasonal, it could be like I'm an actor or a musician. So, depending on gigs I get through the year or acting opportunities I get. So, it's through the year I get pockets of money. So, depending on that source of income and your goal and your age, you should look at investment opportunities. Now, why does age play a role in this? The age plays a role because the usual thumb rule is the younger you are, the more risks you can take. This is even true naturally in life itself. The younger you are, the more you are willing to take risks. That's why it's the younger ones who usually are the ones who get into trouble with the law, the younger ones who get into issues because of taking excessive risks. The same is true in investment. But in investment, it could be a positive thing if done right, like in life, if all things done right. So you can afford to take more exposure in equity, which is far more risky and far more unpredictable compared to other forms of investments. Equity markets tend to be more risky compared to the others, but the returns can be great if you stay for a long term. And this is also another important rule when it comes to asset allocation, that if you're doing equity in your assets, that it should at least be for 5 years, 10 years plus. If you're not looking at 5 years, 10 years plus, do not put money into the equity market because you will not see the kind of returns you want to see in your investment. So these are the fundamental things you should keep in mind as you're investing. Now comes into the question, how much should you be in equity? That's something you should think of in asset allocation. How much should you be in debt? That can be in debt, you can break it down further and say how much should be in corporate bonds, how much should be in government securities. Then you have gold. How much should be in gold? That is something for you to think about. And even in equity, if you are well versed enough, then you have to think of how much will be in India, how much is going to be outside India. But do remember, when we talk about India and outside India, if you are looking at asset allocations outside India, that like how you tend to plan when you go on a holiday. You do research about the country and where you're going to go and where you're going to stay, and you find out what are the local rules, what you should be careful of, if there's any petty crime there. Same way, you should do research before you send your money off to another country or another place to invest. Just don't think if it's an American market, it's a great place to be. No, it's not true. It all depends on where it finally goes and sits. So my analogy would be that, if you are looking at investing outside India, do your research. Even more so if it's outside India, because in India at least you've been here all your life, you have some knowledge here, so you know about it, the brands, the companies, everything. But when it starts going outside India, most of your information comes through social media and websites and hear and say. So that means you have to spend a lot more time doing research to understand what is happening in those markets, because it's your hard-earned money which is going there. Like, you will not travel, like I said, without researching. You will not go to a absolutely brand new country with zero knowledge. That would be risky, right? So same way, when you send your money out, think of that before you start sending your money outside India. It is good to diversify and have investments in various currencies in various countries across the globe. Yes, it would be nice, but at the same time your risks also goes up. As your risks goes up, your anxieties will go up. So keep all that in mind as you think of this. After you do all this, then comes in the question of the patas list. Then you have to think of sectors and stocks, and then get into actual individual stocks. Is it of value? So if you see amount of build-up which you have to do to finally to come to picking a stock, all this so-called bottom fishing, please do not do. You hear this stock is corrected by so much, it's in the bottom. You just can't randomly buy bottom stocks and hope they all go up. That is not investing. That is just gambling. That is entertainment. And investment is not entertainment. Investment can be entertaining, but it's not entertainment. Like lots of things in life can be entertaining. A conversation can be entertaining. Doesn't mean it's an entertainment. So keep that in mind. So this is the first thing which I wanted to get straight out of the gate. How asset allocation goes, how you should get into a mind frame about investing, how you should think about investing. going forward. I hope you enjoyed this video. Hope you found it informative and entertaining on a Sunday evening as we get into Monday, as we get back into market. I'll see you again next weekend where we'll pick up here where I left off. We'll take from asset allocation, move forward and see what should be next you should be doing. The rest of the week I'll be talking about stocks and stock news and company news related to that. But this will be just this, because Sunday being a holiday, there's no market. I didn't want to beat the same old drum and go on talking about some stock and speculate on some bank or some sector or some Trump news, which we do during the week anyways. So I thought I'd offer you something a little bit more to think about and to keep it in perspective. Hope you found this video informative and entertaining as always. Do put your comments down below. Rupesh does read them and he does follow them and he tells me what you guys think. Other than that, I'm there on Instagram and on WhatsApp. I'll ask Rupesh to put the links again below. Some of you don't know where this WhatsApp is. I'll ask him to share it on every video from going forward, so you guys can, those of you who do see it, suddenly can join us there and keep those conversations going. Nothing else more to say. Thanks for watching again. See you tomorrow. Bye.